Everything seems red. Stocks at the Philippine Stock Exchange have been experiencing a bloodbath after reaching an all-time post-Christmas high, with the index reaching over 7,400 on January 11th. The Physics has so far lost more than 500 points, or more than 7% since year-end. This is the first time that the market has fallen by this much after recovering from a 5,800 slump in October. Is it time for those in the market to be alarmed? Here to give us some answers is RCBC Chief Economist Mike Ricafort. Good evening, Mike.
Hi, good evening, Joey, and your viewers. Thank you for having me.
Well, the Physics is more than 7% down from the start of the year levels and over 9% lower than the 7,400 record mark. Is it time to panic?
No, Joey, because this is considered a healthy technical correction after rising dramatically in the latter part of October. From a low of 5,800 in the early part of October, it sharply went up to as high as 7,000 levels right away by the first week of November, and it lingered on until it reached a high of 7,400 last January 11, or more than 2 weeks ago. So those who would like to catch up, they never had the chance to bargain hunt or to bottom fish. So therefore, this is a welcome development for them, being able to get some bargains for this market correction. So it has been a long overdue wait for them, being able to snap up some bargains, and able to catch up, especially long-term investors that look at the long-term prospects of both the economy and the fundamentals or the valuations of investments here in the Philippines.
So what you're saying is that instead of panicking, the right attitude now is to take positions. Is that correct?
Yeah, that's right, Joey, because there's always a better time to come in. And now the opportunities are presenting themselves with this long overdue correction that the markets have been waiting for. And the markets are well supported right now. The underlying upward trend remains intact since late October, when the markets really got excited about the passage of the national budget in a timely manner. So, major support right now is at 6,400 levels. Currently, it's doing at a little over 6,600. So it's considered a healthy correction, and prospectively, the markets would also try to anticipate the recovery story going forward, especially if you look at down the road, 2 to 3 years at least, or even longer, for long-term investors. So the opportunities are, it's really a timing issue for those who would like to snap up bargains in the market.
Glad to hear that, Mike. Yesterday's release of economic figures showed a 9.5% contraction in the Philippine economy for the year 2020. Now, is this something that the market has already discounted, or did that come as a shock?
Well, that has been recognized beforehand, at least for the past month or so. So it doesn't really come as a surprise to see the latest GDP data. In fact, it's even better, the fourth quarter data. Even if it's negative 8.3% for the fourth quarter, it's better than minus 11.4% in the previous quarter, and the record minus 16.9% in the second quarter. And going forward, what really matters most now is that the markets are anticipating for the recovery story, in the sense that since we're coming from a very low base, and a negative base at that, expectations for economic rebound, economic growth this year would be at least around 6%. So therefore, the catalysts going forward would be the further reopening of the economy, especially in view of the inoculation, the deployment of the vaccines in the latter part of this year, that would help reduce new COVID cases and eventually justify further reopening of the economy. And that will definitely help businesses operating at higher capacity, employing more people, and the government will be able to collect more taxes. So at the same time, also the reform measures such as the Create Bill would be something that the markets are anticipating to get them excited going forward. On top of the monetary easing measures, near record low interest rates that would also stimulate greater demand for loans, investment, and the job creation that come along, as well as the preparations for the 2022 national elections in view of the increased government spending on infrastructure. The funds already in place, so the completion of various infrastructure projects shortly before the elections would really help pump prime the economy going
That's
forward.
nice to hear, Mike. Finally, do you see the market further consolidating from here on?
Well, at least if you look at also externally, U.S. stock markets are still among record highs. Even about 3 days ago, they just posted new record highs. And well, the consolidation is also welcome, at least to have a firmer base going forward. So as long as it holds about 6,400 in the coming days, and we're fine. We'll be fine. It will only be an opportunity for long-term investors, especially foreign investors who have been also on the lookout for opportunities, especially on dips like this, to eventually take positions and look forward into the future, especially long-term investors, maybe a longer time perspective of at least 2 to 3 years, and definitely over the long term, the economy grows, and also the market also goes up over the long term. So it's really a welcome development for as long as it holds at 6,400 levels, Joey.
We'll surely keep that in mind. Thank you, Mike. That was Michael Ricafort, RCBC Chief Economist.